Once it is that we take a look and see companies do have a history. Equities are not for the short term. It is for the long term. So it is a matter of taking a look at the companies that have been around for a long time and have navigated the environment and have done so successfully. And the beauty is the prices are very attractive. And it's all about buying at attractive prices so that when there's an upturn, you reap the rewards of higher gains.
All right. So you spoke to stocks being long term and strong balance sheets. What though are you seeing generally in the environment, in this economy going forward, as we look going into the December period where some companies will do very well because the people get excited, there are a little bit more money in circulation. Which companies are likely to benefit from this if you were to pick any?
Well, definitely, I think the ones that have been around for a very long time, the ones that are currently re-engineering their operations. And we spoke about those that are exposed recently to the tourist industry. Right. We have the ones such as Grace Kennedy, Seprod. They have a strong management team, strong fundamentals. And they have gone through cycles like this. So the challenging operating environment that we're currently experiencing is not novel to them. They are accustomed to it. And as the saying goes, in every challenge lies opportunities.
Would a company like Jamaica Broilers fit this bill?
Absolutely.
Yeah.
Absolutely.
Jamaica been doing a lot of baking and roasting of chicken.
And also, what is excellent about Jamaica Broilers is that they have a very, very well diversified revenue stream. So they're not just reliant upon one geography or demography for income. And as it is that they've expanded regionally and doing quite well in the US market. And with the depth and breadth and the size, the company is very well poised to reap significant gains.
Gail, one of the big things that have impacted the market is interest rates. So we're into an high interest rate era. We've seen rates go up, we've seen inflation, and central banks have adjusted rates upwards, while the BOJ has held steady for a little while yet. The governor had indicated that it's possible that we could see an uptick again. How should we read this, and what does this mean for our economy for the rest of the year?
Interest rates, we do know, have an inverse relationship with the stock market. The equity markets do thrive in a low interest rate environment. We've been grappling with the challenge of persistent high inflation rate in the post-COVID-19 pandemic era. The expectation is that we are going to continue to deal with the headwinds of higher inflation over the short to medium term, at least. And we continue to see an intensity in terms of risks to the upside, given the recent effects in the Middle East with the Israeli war, and that's added to what we've had with Ukraine. And that is poised to create some destabilization in terms of volatility with oil prices. And we do know what oil prices do. They have the effect in terms of sending energy prices higher, and that also means higher inflation. So definitely we can see with inflation rate not being anchored, and the central bank here locally as well as overseas continue to emphasize that we might be seeing higher for longer. That's like the familiar narrative, new narrative that we have to be accustomed to. So within another, I would say 6 to 12 months, I think the trajectory is going to be pretty much similar. However, there will be pockets of opportunities, and selection will be key in terms of assets to acquire.
All right. So is there likely to be any change in the equity market then? Last quarter, first, second quarter next year, when would we expect to see anything, if at all?
Okay, so since the start of the year, the market is down in double digits. We may see some type of abatement in it. if we were to say do an outlook for 2024. However, the expectation is that not with interest rates remaining at elevated levels, it is going to be quite challenging to see a dramatic turnaround. But hopefully with the anchoring of inflation and possible downtrend, and this is barring any other further geopolitical risks, definitely with that abating, we should see gradual improvement over time. And then we're hoping that we will see a positive performance in the broad markets.
We tend to talk about the equity markets in terms of long-term investments. Many, though, associate longer-term investments with institutions. Would you say individuals should definitely look at long-term investments in building out their investment portfolios?
Definitely, you should consider equities for the long term. So we're in 2023 and we've been having a challenging time since the last 2 years. We've been seeing consistent increases in interest rates. The positive point to extrapolate from what we've been experiencing is that there are opportunities within this cycle. And so it is about acquiring the assets at attractive prices. A number of the companies are trading at their book value, and this is a very, very rare occurrence. And some of them are actually trading below their book value. So it is going to be key to acquire the assets at attractive prices and then set your investment time horizon. And that could be selective depending on investor goals, and what their long-term investment objectives are. So once that is taken into consideration and you've set your target for your gains and it is generated, I definitely think you should reap the rewards and enjoy the benefit when there's an upside.
All right, so excellent chat so far, Gail. What is it, as we look to wrap, that you'd want to leave in the minds of investors as we look to wrap up this chat?
I would say look for opportunities in the midst of challenges. There are always, as they say, there's a silver lining in every dark cloud. So do not be afraid of entering in the market. Investors have a tendency to buy when the market is actually going up, and then the amount of gains that can be generated is actually minimized. So my recommendation would be a first mover and reap the greatest rewards that's there to be had from the market when we see the upturn.
Excellent, excellent. And there you have it, viewers. You're hearing from one of the gurus. The experts are saying, look, buy when there's opportunity. Buy when there's a discount to book value. Buy because there are tonloads of opportunity in this market, but be selective. Of course, talk to your broker, talk to the experts, and let them guide you as to how to build out your portfolio. And that's why we do this. But as we always say here on Let's Talk Stocks, we give you information to make better financial decisions. Come back with us tomorrow morning at 9. We'll have another very informative program lined up for you.